Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust or investing with investing passively in multifamily syndications that are value add is the best way for you to grow your wealth. I'm your host, Brett Swartz, and each episode I'm joined by some of the best real estate, financial, and wealth minds in the world, where they share their ideas, deal stories, and inspiration, so together we can make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm excited about our next guest. He is a multifamily syndicator and specialist, and he's focused on value-add multifamily throughout the United States. In fact, he's a seasoned attorney with tremendous hands-on experience in real estate, and he formerly worked with the general counsel of Sunstone Hotel Investments, which is a publicly traded REIT. And that role, he managed all legal functions, including securities matters and real estate transactions. And now he's a principal for Next Wave Investors, and he oversees the firm's acquisition and investments to ensure accuracy, legality, and efficiency. Please welcome to the show with me, David Sloan. Hey, David, how you doing?
Good. Thanks, Brett. That's quite the introduction.
Oh, thank you so much, and for being on the show, and absolutely looking forward to diving in a little bit more about your story. And can we start right there? Would you give our listeners a little bit more about your story and your current focus?
Yeah. As Brett indicated, I was formerly had a real job and was at a larger company. And in 2014 and 2015, started to dabble a little bit with one of my current business partner, Jordan Fisher. He had, a decade long or so experience in multifamily asset class. We both had a mutual interest in continuing his, and my investments in multifamily. We've been doing this since since 20 early or late 2014, early 2015. So we're in year, call it 6 or 7, however you want to look at it. And we've grown our platform to over $200 million now in assets. We've taken, I believe, 19 deals full circle. That's purchasing, stabilizing, and selling. We have another 7 assets that we currently own, and we have 2 more under contract, including one that we'll talk about today, which is our Spanish Oaks deal in Las Vegas.
Beautiful, David. Thanks for that overview, and that's fantastic. And before we dive into that deal and some of the philosophies on multifamily investing, I want to take a step back and help the audience to get to know you a little bit better, David. And this is the question. The question is this: I think we've all been given certain, gifts in this life. Some people call them strengths and superpowers. I believe they're God-given gifts, but I believe these gifts are given to us to be a blessing and help to others. So I'm curious, David, what's the gift, maybe you or strength that you believe you've been given, and how does that help how you help people today?
I would say the strength is just a practical aspect of investing here, and just take deals. There's the theoretic, and you're sitting behind a computer, and how can you financially engineer to make a project or to make returns work, and then there's the practical aspect, which is I guess applies to a lot of people that invest with us, is they don't have experience doing this. That's why they're investing with us or people like us. And just practically letting them know that here is what we do. There's really no rocket science to it. What it is just understanding where there is potential value to be unlocked, going out, after you understand what kind of value or potential upside there is, finding investors, explaining to them that, look, yes, you can go with a bunch of different companies. However, here are the things that we focus on. Number one is being transparent, letting people understand, here is what we're doing. We are buying, we are renovating, we are stabilizing. We have experience with doing this. We've done this before. As a matter of fact, in this particular deal we'll talk about later, we've done it right around the corner many times. And so I think that bringing that to the table helps people just get comfortable with this investment. At the end of the day, we're all making bets. We're making bets that we can make not only the asset stronger, that we will have some sort of an exit within 3, 5, 7 years down the road. So again, I think our strength is explaining this to people in very understandable terms. Also being accessible and having very clear and consistent reporting to investors, which is something that we've found that some of those investment companies like ours out there lack. We've made a significant investment in our back office. We have, depending on where we are in our growth stage, anywhere from 5+ accountants that are on staff, and that's something that we really focus on again and helps us with transparency.
Beautiful. Love that. Yeah, love transparency. Love the clear communication and reporting. And so let's dive right into multifamily investing. When did you become, fascinated and or really excited about helping others achieve wealth through multifamily investing?
Well, at first, selfishly, we were investing with our own money. And then as we realized that, you know, our own money could only go so far, you start to bring in friends and family into these deals. And then as you continue to grow and we are vertically integrated, we self-manage as well. And the only way really to get to a break even point is to grow on the management side. And so as we grew, we were capital constrained. We started to work with friends and family, and now that we've proven this time after time that we can, in a risk adjusted manner, continue to grow our platform, and at the same time continue to really provide outsized returns to our investors. It's rewarding. I think that anytime we have a new deal, anytime we're raising money, we're always very nervous to take any dollar, to be honest, because the worst thing that I would hate to have somebody that I know, a relative, someone in our neighborhood, another one of our kids' parents, entrust us with their money and not be able to provide a return on that. So it's the most rewarding thing to grow together and to make money with your friends and family, but it's also puts the pressure on really to perform.
Yeah, absolutely, right. And hopefully as the tide rises and you guys are doing a great job, everybody wins, and that's the power of the syndication, right? Everyone can
Hmm.
put a percentage of their wealth into a deal, share in the risk, and then also share in the upside. So, what are some questions that potential clients ask you, David, and for Next Wave investors?
I would say that there is a lot of focus on um, being concerned about stretching the team too far. And so, for instance, when we want to jump into a new market, like we jumped into Texas market back in November, we didn't have a presence in Texas. So prospective investors were really concerned with, do you have the ability to add this to your plate? And so fortunately the answer is yes. And it's been a successful project, albeit we've only owned it for a little less than 8 weeks. But I think that it's making sure that our back end of our office is really growing as we grow on the front end and grow our asset base. And so that's one question, is making sure that we're saying, yeah, it's no problem, we're going to take over into this new market, and other people are saying, well, let's really see if you have that back end office capability to expand. I'd say that's one thing. The other thing that we get a lot of questions on um, would just be, I say questions, it's not really particular to us, really deal specific questions, such as assumptions on debt, assumptions on exit cap rates. We get a lot of those questions, which is, who your really sort of investors are that are in tune with the details by the detailed questions they ask.
Excellent. Yeah, those are good. Those are good things. The ability to expand if you're going into new markets. But you said 17 deals full cycle already, I think is what you said,
About
and then
19, I think.
19 deals full
Yeah.
cycle over $200 million, and then I know there's 7 that you currently have now, and so but yeah, you have when you're expanding to new markets, it could be a new thing. But the good thing is Texas seems to be doing very well, and it seems to be where a lot of people are fleeing California. By the way, Dave and I are both in California. David's in Southern California. I'm in Northern California. And so we're seeing kind of a flight to these other places. So David, do you want to speak about that and then dive right into Spanish Oaks, which is in Nevada, and how we're seeing kind of a migration for businesses. In fact, I think it was Oracle, I believe HP and Tesla all announced in the last like 120 days that they're all relocating to Texas. So you want to speak about that?
Sure. Yeah, no, that what you're saying, the flight, I think you see a lot of this on the news and you read about it, is the flight out of California and some of these other states that have higher taxes and more government regulation. We've definitely seen that firsthand. Our other sort of group of assets is in Salt Lake, so we're really concentrated in Salt Lake, Las Vegas, Phoenix, and Dallas right now. And in all of those markets, we've experienced that. And even in Las Vegas, where there's definitely been a big hit on the tourism spending and the jobs in the tourism industry, we've seen a lot of people moving there since March. And a couple things. I mean, obviously, weather's good, except for the 4 or 5 months a year where it's over 100 degrees. There has been a lot of job growth and diversity out of the gaming industry in Las Vegas. But more importantly, it's the cost of living relative to primarily California. And during the pandemic, and we still see this today, occupancy is not an issue in all the markets. Occupancy has remained really high, pretty much at north of 90% in every single market and every asset we've had. It's really market to market when you look at collections, though. Vegas has probably had the biggest hit on collections. What we've seen generally at our properties there is 5 to 10% bad debt, and most of the time people in this business are underwriting 1 to 2%. So it's an order of magnitude above what we've performed. But, if you're at 100% full and 5% or 6% or 7% aren't paying, you're still in the 90s on collections. And so it's not as bad as what you would think. And the primary driver we see is just relocations. There's just, for every tenant that's there and maybe lost their job, there's someone else moving from California that can come in, step in their shoes and pay rent. So it's stronger than what we thought it would be.
Excellent. Well said. And I like that Salt Lake City, Las Vegas, Phoenix, and Texas, and that occupancies have remained pretty healthy, given what happened with COVID-19. And I think you picked some good markets and some good deals. That being said, do you want to dive into Spanish Oaks and talk about that deal that you recently found in the Las Vegas area? What you like about it, how you found it, and what the vision is to capitalize and make a good investment here.
Yeah, so Spanish Oaks is a 1976 216 unit property. They consist of, the unit mix is really pretty simple. It's 1 bedroom, 1 bath, 2 bedroom, 1 bath. About 160 of the 260 units need a full renovation that we have underwritten and have in our PPM and our other investment materials. But we project here that this is going to be around a 20% or north of 20% IRR based on a 3-year hold. We do have a bridge loan as our first mortgage lender, and then we have some preferred equity, and then there's a 4.2 million of common equity, of which the sponsorship group is going to bring in at least $500,000. And so the of the $4.2 million, we're down to a little less than $500,000 remaining to raise. And we just really like the deal. And again, like we talked about earlier, every one of these deals, you're making a bet, no matter what the market. It sounds maybe worse just because it's in Vegas, but it's it's a bet nonetheless, right? And we believe over the next 24, 36 months that Vegas will, we'll see a strong recovery. Obviously, there's a lot of good things happening in Vegas over the last, call it 5 years, but certainly over the last year. And then next year, you have additional venues that are going to open up. We know that Las Vegas Raiders are obviously in town. They've played now a full season. Granted, nobody was there at the stadium, but that venue will open up next year. There's Resorts World that's on the Strip across the street from the Wynn. That'll open up, and I think it has somewhere between 4,000 and 6,000 new employees. So there's employment drivers that are opening up, and there is continued inflow of people. And this is a, call it C plus B minus asset, and that is always going to fulfill a need, and it's going to be a requirement to fulfill workforce housing.
Love that. Yeah, I love the value add opportunity for 160 of the 216 units. So there's still plenty of meat on the bone. I like the 76, kind of that vintage, that CB kind of combo, and then the ability to get 20% IR in 3 years if achievable. That seems like very solid returns. And then as well as you've already been there, right? You've already done it down, like you said, down the street. If you caught that early in the
Mhm.
interview, you've done this before. You just sold on a deal not to actually I think the last few months, which leads into the next question, David, which is actually our first deal that we did together with the Deferred Sales Trust. So for our listeners who don't know, if you haven't heard by now, we specialize in helping people defer capital gains taxes on the sale of businesses or real estate. And also, it works for multifamily syndication. So, David, you want to talk through your experience as it pertains to the Deferred Sales Trust? How you learned about it, what was the biggest thing to overcome, and what it's been able to do for you now.
Yeah. Well, that's right. We've done now 2 rounds of sales trusts, and let's see, not both, but the first one that we did was actually a few miles away from this property. It was another property we had in Vegas that we sold in 2020. By the way, this is our 11th deal in Las Vegas. I just had to run through my head and figure that out. But so 11th deal in Vegas. But the last deal we sold in Vegas was the first deal that we put the money into a deferred sales trust. Then we had another deal in Phoenix that we did the same. And the reason, obviously, like anyone, right, you want to defer and delay sort of incurring those taxes on capital gains, but the optionality that it provides relative to a 1031 is what was the most attractive to us, and the ability to take those capital gains and to reinvest that money in our own deals or other people's deals, or to invest in stocks or bonds. The flexibility was the piece that was the most attractive.
What was the hardest thing to overcome? Because being in the multifamily industry for a while and maybe doing 1031s, or maybe hadn't done any 1031s in regards to your syndications, what was the hardest thing to overcome for the Deferred Sales Trust? Because I know for me at Marcus and Millichap, this was like 11 years ago when I first heard about it. I'm like, I was selling multifamily deals, doing 1031s with clients, and we're like, "What? This seems like too good to be true." Or, How is it really going to be work for me? What was the biggest challenge for you to overcome, David? And then what is it like now that the trust has been closed, and how's it working out?
Yeah. So I would say that the biggest thing to overcome is probably not too different for anyone else. Is it sounds like a great alternative, but what's the catch, right? And I would say, the catch really is, number one, really understanding how it works and getting comfortable with it. Number two, I would say that the paperwork was pretty easy. We thought, you surrounded yourself with a good group of advisors, Robert Kelly, as well as Todd Campbell on the legal side, and so a good team that will take the time to sit down and or have a phone call. In Robert's case, we met him for lunch, but a good team that really knows what they're doing, and so that's really helpful. I would say what would be something that would be, and don't want to say it's a negative, it's just a learning curve, right? And that is taking that money and reinvesting it in deals, our own deals, right? It's a little extra paperwork, yes. However, it's worth it, because you can take that money, delay avoiding taxes, and really be able to use that money tax free, obviously, until there's some sort of a liquidation event, but grow that money, prior to paying taxes, just like kind of a self-directed IRA, right? It's really nice to be able to do that, and it provides us the ability to grow our business.
Yeah, absolutely, 100% right, and that's what we pride ourselves on, giving you some more access to capital, delaying, deferring the tax, right, versus the 1031 exchange, which can be very kind of challenging. In 99% of the syndicators we work with do not 1031. They don't allow 1031 money in, nor do they do it out, because it's just too complicated. But the deferred sales trust is very, very flexible, and it allows each individual to kind of go their separate ways, and then to have their own deferred sales trust to go back into more deals. And you can learn more about that at capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. And let's see. With that being said, David, are you ready for the lightning round?
Sure.
All right. Knowing what you know now, if you go back to your 25-year-old self, David, what's the one golden nugget that you would make sure that you would do or no?
I would have went undergrad and graduate school, finance and business.
Excellent. What's the one book you've recommended the most in the past year?
Um, Jerry Seinfeld's first book.
Oop, that sounds like a good book. Let's see here. What's the biggest project besides Spanish Oaks? Well, let me put it this way: what's the biggest delegating business project that you're currently working on, and how do you envision that having an impact for your business?
Um, delegate. We just hired an analyst, and here and over the next 12 to 24 months, we want to see him get out from behind the computer and take over some of the travel and project management.
Nice, beautiful. What's the one thing you're most curious about right now?
Um, what happens to interest rates over the next 36 months, and do cap rates follow?
It's right. So fascinating to see those two things happen. I agree with you. Um, Last question, and this will kind of wrap up the interview. Based after all your success in acquisitions and multifamily management and helping a lot of people create and preserve more wealth, and you're an attorney, right, as well, and everything you've accomplished, David, I'm curious, how do you stay centered in your values, and then how do you stay encouraged to reach for new heights?
Um, I think that staying, as far as staying centered goes, and I think that investing with your friends and family and neighbors really helps to hold you accountable. You don't want to take any stupid risks, and if you are going to take risks, you better make sure other people are on board and understand those uncertainties. Um, and as far as what continues you to drive, I think that I've heard that you learn in your 30s and earn in your 40s, and I'm only 43, so you gotta make hay while you can.
Beautiful. Love it. Well, I appreciate your time, David, and I appreciate you sharing a part of your story, sharing us with the Spanish Oaks. For those who want to get in touch with you and learn more about that, what's the best place for them to connect with you and find you?
Yeah, I'll give you my email address. It's David at nwimulti.com. You can also find us nextwaveinvestors.com. Feel free to call, email anytime. We're around. We're always looking for new ideas, new partners, new equity investors, new debt opportunities. So, and again, love to hear from you.
Beautiful. Well, thanks, David, for being on the show. That's David Sloan with Next Wave Investors. Again, that's nextwaveinvestors.com, and you can reach out and find him there. And I want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a deferred sales trust to exit your business, real estate, or even commercial real estate syndication is the best way for you to defer your tax and grow your wealth. With that, please rate, review, subscribe. Go to capitalgainstaxsolutions.com if you want to learn more. We appreciate you listening. And if you're a business coach or you're a business professional or a commercial real estate professional, you can go to experttaxsecrets.com to learn how the Deferred Sales Trust can help you grow your business. Thanks so much, everyone, for listening. We appreciate you. Goodbye.